It's time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We're back again with Jeff Weniger. He's head of equity strategy for WisdomTree Asset Management. He's based in Chicago, but joins us this morning right here on Queen Street in Toronto. And you've been watching in this country and in other countries something that's now on the table in this country, and that is the idea that big Canadian pension funds, and we showed some visuals of some of those funds as we went to break, the Canada Pension Plan Investment Board, the Ontario Teachers, other major pension plans should be deliberately investing more of their, or devoting, I guess, a larger portion of their equity portfolios, their publicly traded equity portfolios, in Canadian stocks. It's a contentious idea. A group of Canadian CEOs said recently that they were disappointed that pension funds were not investing more of their assets in publicly traded Canadian equities. The C.D. Howe Institute has somebody who, C.D. Howe Institute actually has a pension policy council within the think tank. They think it is a bad idea, not consistent with the proper management of pension fund assets. And other countries are dealing with the same debate. Oh yeah, I mean, is this the right way to do it? Is this the wrong way to do it? I think that's not necessarily the question we should be asking ourselves. All right, so who am I, this American guy, to decide what the Canadian pension system should do in terms of their Canadian equities? All I can do is forecast and read the political tea leaves and then look at what's happening in these other countries. I look at global stocks. All I do is read all day long. I'm telling you, this is what's coming. And here's the thing. Let's go get on an airplane. Let's go down to New York. Let's pull some investors together and say, hey, do you realize the pressure going up in Canada to do this? No, what are you even talking about? What are you even talking about? Nobody has any idea. I call it the pension wars. I'll give you an example, because in that letter where the former CEOs wrote that open letter, they put it in the Globe and Mail and in the Toronto Star and said, hey, you have 4% Canadian equities. Which critics would say, which is in line with the presence of the Canadian stock market in the global equity market, about 4%. Tell it to public opinion. You're seeing it in Britain, for example. Guess what their number is? 4%. The British insurance system, the British pension system, they're saying the same thing, because look at the game theory behind this, Paul. You're in London. Everybody who wants to IPO, where do they IPO? They do it in New York, so you need to turn the square mile around. How are we going to do that? Let's get British equity valuations up. It's the exact same thing with the TSX. We're seeing it in Korea. We think on the defined contribution side, not necessarily the DB side so much. It's happening in Tokyo. They tripled your max out on your retirement plan on January 1st. In Japan this year. That's part of the bull case for the Nikkei and the Topix, like we were talking about earlier. I think this is coming. I think this, I don't know what we want to call this, protectionism on the investment side, or this push up and down Bay Street, right outside here. I think there's going to be some tough questions being asked. And when they talk about that 4%, I mean, it's a little disingenuous, because it's 4% Canadian equities. And then you look at some of these pensions, there's a line item for timber. Where do you think the timber is? That's Canadian. That's BC. But we don't talk about that. But critics of this idea would say the Canada Pension Plan Investment Board and the Ontario Teachers have done a pretty darn good job in recent decades, really, at stewarding the pension assets. And one big reason why is that they've stepped out around the world and they've purchased things like toll road highways here, port facilities publicly traded equities in other parts of the world. And they have not been beholden to staying home in Canada, which is a tiny portion of the publicly traded equity world and the privately held world as well. Oh, look, no doubt about it. Everyone has made this move in the last 30 years towards more private equity, long-term engagement away from their own domestic stock market. But again, tell it to public opinion. If you want to try to goose up the relative value of your stock market, because it doesn't matter who you're means, your Canadian stock market, your British stock market, your Japanese stock, it doesn't really matter. The reality is that for about 15 years, the country in question has woefully underperformed the S&P 500. The only thing that has really kicked everybody's butt is U.S. stocks, and they're having a moment of truth. They're all looking in the mirror. So I think it's coming. I think it's coming. You pick a country, these pension wars are coming.